You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, what are we seeing for the futures market?
Well, we're seeing a continuation of the situation that's pretty bearish at the moment. Again, there's a crop tour that's happening across the Corn Belt, looking at corn and soybean outcomes. And so far, I'd say there's some mixed results. Uh, Parts of the country to the north and South Dakota and up into Minnesota, et cetera. They're talking about pretty good yield prospects, but still some underlying issues to look at. Challenges over in Ohio, still to be dealt with. Generally very good reports though in Indiana. I think they're coming towards the last day or so here when of that report. We'll get right into the heart of the Corn Belt. I don't doubt that'll look pretty good. Over here in Kansas, we have our ups and downs, still things not finalized. So just because that crop report makes a statement, it's still not the end of the marketing year. I think overall we're coming up to the September 1 time period by which the USDA they'll be out in the fields, objective yield surveys on the one hand, farmer surveys on the other. Will be another week or so down the road, and we're aiming right now in the futures markets to trying to assess where we'll come out on the September 12th crop production WASDE report. And that's a big deal. I would just mention because we're talking about dates of information. You're also, as we're looking at September 1, that there are also surveys going out from the USDA to look at I guess wheat production. There'll be a small grains production report that'll come out into September. A stocks report that's coming into play. So anyway, anymore within a low price situation like we've got on the futures markets, the thing we're anticipating, hoping for, it's positive news, is that low prices will help to spur usage. And I would say, we're in a time when we've been looking at so much negative news, there are some positive shoots out there. Green shoots, I think they call them in the financial markets. On the wheat side, we've had prices have gotten low enough apparently where the U.S. Hard red winter wheat sales pretty strong. Really, we had for the week ending August the 15th, we had 8.4 million bushels of actual shipment movement, and that's compared to a rate of about 4.8 that we need to meet the USDA's projection. So it's not great news that prices are low, but we have gotten down to the place where we're moving some wheat, and you still have these international factors that I think I heard Seth Meyer at USDA chief economist at our Risk and Profit a week or so ago say that the wheat market is confusing given how tight it is, but yet prices being as low as they are. So it's something to be watchful, that we're starting to see movement and still uncertainty, and anything but a stable situation over the Black Sea region. If anything, it's starting to destabilize all that much more. So anyway, at least just from reading the news and observations, so that's an issue. So you're asking about the wheat futures, grain futures. Yesterday, September closed 371. Dees, new crop Dees 393 and a half. Both those down about 4 cents. Soybeans November 961 and a half. SEP September contract 941 and a quarter. So again, both those below 10. Both the corn contracts up front below 4. For wheat, we're below 550, I guess, for those first two contracts. September 529 and a quarter. Dees, the Dees contract 545, and that also down about 6 and 3/4, 7 cents. The soybean numbers were down about 20. So I guess I would just say that in so many years, you look back historically, and the market gets to this place in time where it's been so focused on production prospects on the supply side, and when a large crop comes on and we're really not focusing even yet on the usage side, that we have tended to see lows around late August, especially early September. And gosh, that seems to be the human psychology we're following right now. And maybe if you have time at the end of this today, we can talk about where that leaves producers in terms of the types of actions that they can take if they have old crop on the one hand, if they have new crop on the other.
And Dan, what are we seeing for some prices when it comes to cash?
Well, corn prices, cash corn, you still see strength in what strength there is out in Garden City area, 437, 66 cent over basis, positive basis as of on Thursday's closes. You still see a 401 at in Colby, 408 in the Hutchinson area, Salina, Topeka, Columbus, all below 4. Interesting that um, when you look at ethanol plant prices, that the only average price in the for a state in the United States for corn prices that's over $4. The only average is Kansas at 4, well, basically 410. There are some others whose top end range comes in over 4, just barely. The range in Kansas 388 and a quarter to about to 423 and a quarter. So that's that low price going into ethanol plants has been helping the profitability of ethanol. You know, that's a positive. Again, you're supporting that demand base to see what the support usage on that will show up probably in the quarterly stocks report on down the road. So anyway, not just trying to conjure up or think of positive news, but it is good to keep in mind that we're so focused on the supply side right now, but it's the demand side is being supported by these low prices, both in ethanol and in the export side. We'll see where the feed use comes in. I think that the feed use will go, as we heard Glenn Tonser talk about at the Risk and Profit conference a week or so ago. That'll depend on livestock numbers, because the cost is cheap. It's just a matter of the numbers in feedlots, hogs, poultry, et cetera, to keep all that going. I would say for other crops that you do have some areas where of a little stronger wheat prices than others. The Hutchinson area 539, 10 over, Salina 524, only 5 under, 519 in Topeka, 10 under. But again, Colby, Garden City, and Columbus all under $5. Soybean prices again, if there's an overall thought in the market that nobody's arguing with, is that, gosh, it looks like a good year for soybeans. So the soybean cash prices have been suffering their strongest cash prices in the state on yesterday's close. 944 Hutchinson at 3 over, 942 at Topeka. That's the top bid in that area, 1 over, and everything else running well, pardon me, not 935 bids, 6 under in Columbus, and 917. But again, I'm kind of talking about the new crop. Those are the spot bids when the crop isn't here. In all those locations for corn, for soybeans, you've got generally a lower price, at least a moderately lower price for harvest at this time. Anticipation of harvest low. Want to mention grain sorghum. The top price in the state, Hutchinson and Salina, both at 384 for the cash price, and and that's a positive basis. 387 in the Colby area. So we've got really some pretty good basis bids. It's just that the lead contract for grain sorghum, well, for corn, that grain sorghum gets priced off of is again, at 371. So you've got that type of situation.
And Dan, we mentioned it beforehand and talking about it now. Do we give up on old crop sales?
Well, that is the issue that I think I've hear people, professional market commentators, market advisors are talking about making bin space basically for the new crop harvest. Uh, for if our time window is from here till October 1, when we see that most of the corn belt start to move higher, then we'd have to have a surprise probably in the September crop report to make anything to make any to bring us a lot higher, or something unforeseen coming out of the world situation. I don't know that it's not the right season for that to happen out of South America. If there's anything that could bring that type of upheaval, that's probably the Middle East and Black Sea region conflicts. But absent that, it's hard to sit here and anticipate something that give us a great big jolt. So when right after we say that, probably have to eat those words, and I probably, from a grain marketer point of view, I'd gladly eat those words in the next not 30 days, but generally looks pretty rough. If someone does carry over from one year to the next, you've got they it's a cash flow financial decision. Do they need the cash or not? Do they have the storage? But we keep wondering about the possibility of an upward move, and it that possibility remains, but the window is closing on it, and it's getting to the place now where there's a big enough crop anticipated to come that you'd have to have almost a geopolitical issue, a larger economy-wide issue that would affect the financial markets, make the commodity markets move, and raise prices. So I think no doubt here we're talking about it now, Shelby, but ag producers have been looking at that for a good while. As I drive across the state, I see trucks moving. They generally probably the need for storage space to take what cash they can, move on, and get ready for the next go around is probably what's going on for a lot of folks.
Dan, I appreciate you taking the time to join us and give us our grain market update.
Shelby, thank you very much. I appreciate the opportunity to work with you on this.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.